Hello, this is Erin Swenlin with DecisionPoint.com with your Daily 5. I'm going to tell you which 5 charts I'm going to be looking at during the next week very closely, and I think you should be too. So let's go ahead and get started. We only have a few minutes here. Before I do, though, I wanted to mention that I do work at DecisionPoint.com. I provide consulting information to StockCharts, but I would invite you to check out my website and my 2 products. So I won't get too long into that. All right, so let's start off with the 5-month candlestick. This is really the chart that I watch every single day, all of the time. And it has morphed quite a bit from when I've been looking at it previously and when I looked at it with you a little while back. So we originally were looking at a rising wedge, which is a very bearish pattern. And you could draw that right through the top here. And the bottom was coming up just like it is now, only we had it coming up just a little bit closer to these 2 bottoms. And so we had a bearish rising wedge, and we'd been watching it, and it just wasn't resolving as it should to the downside. And, obviously because, the market started to get more bullish and we started to rally. So as Carl and I have been watching this chart, we decided that it seemed much more likely that we were looking at a rising trend channel, which of course is a bullish pattern. And there were a lot of reasons for that. You can see right now on so far during trading here on Friday, we're actually busting out the top of this rising wedge, which means we're going to start increasing the steepness of our rally. And while I think that's just fine, that's positive and possible, it does open us up to some vulnerabilities when we pop out the top of a rising trend channel. We're increasing the momentum so much on the rise that's when we do that pop out of the top. But generally, you're going to see a pullback come back either all the way into that range of the trend channel, or we could see it establish a whole new trend. It will just be steeper, but steeper trends are a lot harder to maintain. So the picture has gotten a lot brighter, I have to say, but and I like seeing a nice strong rally, but I have to say it does worry me just a bit that we're popping out of the top of this rising trend channel as it is right now. The PMO was on a sell signal yesterday, but so far today, you can see that we've got a new PMO buy signal coming in. And that, of course, is positive for the market. When we had the rising wedge, which was the bearish pattern, we were looking also at a negative divergence with the OBV. So there are a lot of negative bearish characteristics out there that were causing us issue to continue with a very bearish outlook. Right now, the RSI is overbought. And, we're seeing the volume coming in on this rally, which is quite good. What I'm watching at this point going into next week, particularly, will be the VIX. It's coming up pretty close here. I invert my scale because to me, overbought should be at the top and oversold should be at the bottom. When we get oversold on the VIX, that's when we usually start to see those rallies to the upside. They almost always land right at a market bottom. And so now we're getting really close to the upper band, and it works the same way. With the upper band, I'm going to be looking for a price top as soon as we get right there. So far, so good. We're above the EMA, which tells you that there is internal strength in the market currently as we're making these new all-time highs. So I have to say, the picture looks pretty bullish here. We're going to be vulnerable soon, though, in my opinion, for a pullback. So of course, we're always vulnerable to that. But at this point, just seeing the steepness of this rally, and like I said, seeing the VIX coming really close to that upper band on the inverted scale is what I'm going to be watching to look for that pullback, because we know it's going to happen. Market bias. So this is something that we look at with our Swenlin trading oscillators, the STOs, and with the ITBM and ITVM. These are intermediate term breadth momentum and volume momentum indicators, again, for the intermediate term. So what we do is we look at this chart and it helps us determine the bias of the market. Do we have a bullish bias or a bearish bias? And we determine that mainly, very simply, by looking at the green, if you will, on the chart. And so you can see that we had a very, very positive, strong bullish bias back in November and into parts of December here. So that was great. When you have the bullish bias, you can expect, chart patterns to likely resolve in the bullish direction. Likely won't get a rising wedge, for example, to execute to the downside. So we want to pay attention to the bias. It had gotten, I wrote a Chart Watchers article, I believe, that told us that we were really looking at the disappearance of the bullish bias. So once we lose that bullish bias, then we start, like I said, you start looking for, you're going to start looking for bearish conclusions to your chart patterns and your rising trends, that sort of thing. Well, I wanted to point out that since this really strong rally that's coming this week, we have seen that bullish bias returning. And so again, when we have that bullish bias, despite having that chart where we're popping out of the top of a rising trend channel, this bullish bias tells us that that's shouldn't be completely unexpected, and that we may not have to worry quite so much as we normally do, just because we do have that bullish bias. To me, we had the bearish bias, we had the weak price action, we had the rising wedge, and the market still did not go down. So clearly we have quite a bullish bias going on. All right, it wouldn't be your daily 5 unless you looked at the gold chart with me. I'm going to look at GLD because we're actually getting the market action today for Friday, and I wanted you to see that. We kept saying that, this was gold's chance to shine, if you will. We were getting a pretty strong rising trend. It was tortured, as Carl likes to say. He wrote an excellent article in our free blog on StockCharts.com. You'll want to check that out. But he always talks about gold's tortured progress. And so we were seeing that tortured move to the upside here for gold, really difficult, back and forth. And it's formed a rising wedge. I was feeling pretty bullish on gold, but we were starting to see some deterioration. The dollar had a pretty good day on Thursday, so we saw gold drop a bit. But today, as you can see, big gap down for GLD. And right now, this is that important support level. We just lost the 20 and the 50, and now we need to watch very closely this level where we have the September low and the November lows. It's holding for now. I'll be watching, obviously, next week. If we lose this level, I would be looking for about a 170 drop, and at least to that 200-day EMA. If we lose the 200-day EMA, it's going to get a little bit more dicey for gold. It's already quite dicey, if you will. The RSI has now moved negative, and you can see our PMO has topped. The discounts have also started to fade, and generally that is, is a bullish. That means that participants are feeling more bullish. And we really want those bearish high discounts, because those usually are what help rev a move to the upside in gold. It means that everybody's very bearish sentiment-wise on gold, and that means sentiment being contrarian. We should expect a bullish move to the upside. But right now, gold looking a little bit dicey. I'm not feeling quite so bullish on gold right now. Oil, USO, we just recently got a new PMO buy signal yesterday on USO, which is what we follow for our trend model signals. And you can see a very similar picture here, as oil has formed a rising trend channel, just like the SPY. And we do have it popping out above that rising trend channel. So very bullish activity going on with USO. I do have a red arrow up here just to show you that we do have overbought conditions. And if you go back historically, those are pretty much lined up with some market tops. At least we have for the past 6 months. This is what we're looking at. So we could see that pullback bring us back into this rising trend channel. But overall, I have to say that oil is looking pretty good. I am noticing right now, though, that the volume is starting to pull back on this very strong rally, and that could tell us that it's getting exhausted. But for now, I am bullish on oil. At this point, like I said, we may start to see a little bit of a pullback just because we have popped out above that rising trend channel. So that brings me to the diamond of the week. My diamond of the week, honestly, on Monday of this week was Sunrun, which I'd love to show you that chart, but I only have 5. It's done very well. I still like it. I still like solar. And I think Sunrun's probably one of the better choices right now because it had pulled back by a lot. But anyway, we're here to talk about IEO, Oil and Gas Exploration and Production ETF. And I really like this ETF. Like I said, with oil doing well, I've started to see some of these companies in the oil and gas exploration production area. I've started to see them really do well. The only issue I have right now is that they are getting overbought, and this ETF is really experiencing quite the same. But I do like this going into next week if we can continue to see that move in oil going to the upside. Really, it looks like there's still more to go on IEO to move higher with that PMO buy signal. I've set up a 9% hard stop here. What I like to do in my diamond reports is I like to give you an idea of where you might want to set a stop. This is where 9% would land you right about here at these tops back there. But, honestly, a lot of times I won't hold through a stop just because if it's close to the 20-day EMA or some other support level like this one, I don't know that I'd need to wait and watch it go all the way down to the bottom of this trading channel. We do have overhead resistance arriving, so this could be a little difficult. But so far, I'm really feeling pretty good about this area of the market. So that's why I decided I would present to you IEO as my diamond of the week going into next week. That's all I have for you. Again, Erin Swenlin from decisionpoint.com. Come check us out. And thank you very much for watching your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.